following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit
That's awesome.
for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. We're kicking into the last week of summer. Gotta love it. Let's take a look at one of our 4 agreements. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that is right here, right now. Market-wise, let's take a look at it out here. We have the Dow Industrials down 182. We get the NASDAQ down 34. S&P's down 17.5. Gold contract down $5.40, trading at $12.06 an ounce. Silver down 25 cents, $14.44 an ounce. Copper down 4.5 pennies at $2.66 a pound. Light sweet crude up 70 cents, trading $70.22 a barrel. Let's go right to the oil market first, because what we have here is this. Oil is going right into the downdraft that was out there in May as well as July. We are up 1% inside the oil market out here today. You've done 450,000 contracts. When we take a look at this, your last highs in this consolidation is $71.63. We hit 70.50 out here. What I expect we're going to see, bottom line, you're going to basically tap these highs, and we'll see how the bulls and bears react. What we do have inside this market is that on the 15th of May, 25th of May, as well as the 17th of July. This is where the large sellers were. In both cases, both of those dates there, you had sellers come in the market and drive oil down by $3 a barrel in one day. Notes and bonds. Bottom line, notes and bonds want higher price once again. What we had on Tuesday. Tuesday, we came down with big volume. Yesterday, we got to a lower low. We rejected lower price. Bottom line, we start going topside once again today. This is a decent move, and if we take a look at it, percentage-wise of what we actually did from the last leg up in the market, is that if we take a look at where we started from in August 12th, we're down at 141.27 on the 30-year. We go all the way up into the 145. We pull back. That was exactly a 0.382 retracement. So when you get a 0.382 retracement, folks, that's a very shallow retracement. Bottom line, saying 2 different things. Number one, you want to go back to the swing high. In this particular case, we're talking 145.29, and we'll see if we get any juice as we get up into those levels. The 30-year has been looking to take out the 145.28. We hit that number in May. It had wide price spread, had volume, had everything behind that move in order to get to higher price and to actually stay to higher price. The 10-year right now is yielding 2.857. King dollar. What do we have for King dollar? So good old King dollar, folks. Bottom line, is having a hard time holding higher price. We take a look at this intraday out here. You hit 94.850. We are at 94,695. Bottom line, 20,000 contracts traded. And in this particular case, What we haven't been able to do, which is pretty unusual actually, is just even get to the high of yesterday. Yesterday we gave it up on price, gave it up on volume. Yesterday it traded up to 94,860, ended up closing at 94,522. Bottom line, the ABC down continues inside the dollar index. We're going to take a look at some of the higher volume equities out here, and this will be a low volume market as we've had all week. And I expect as we kick into tomorrow, you'll really see the volume come out of the marketplace, meaning very light volume. You get a couple high volatility stocks out here today, no doubt. Dollar Tree came in with numbers, gave it up, down $14. That's trading at $80. You get Electronic Arts, that's down $12.50, trading $116. We have Sienna, that was a big move up. That's up $3.20 or 10% move up. That's trading at $30.54. Signet Jewelers, big move there. Spending money on jewelry. That's up $13.50 or almost 20%, trading $68.20. And Signet Jewelers, that's just about all the big jewelers that we know inside those malls, whether it's Kay's, whether it's Jared's. Bottom line, big numbers. Inside the Dow Industrials, the strength versus the weakness. So we had the Dow Industrials today, got up to a high of 26,104. Right now you're at 25,952. Boeing is putting 27 negative points into the Dow. Caterpillar 19, Goldman 16, Home Depot 14. The only equities that are in the positive inside the Dow, Apple. Apple's putting 9 positive points. You have Walmart putting 1 and Verizon putting 1. Inside the NDX 100, strength versus the weakness. Strength out here, Micron Tech is up 1.5%. You get Facebook up 1%. Taken away from it, big numbers. Dollar Tree's down 15%. Electronic Arts is off 9.5%. You got Mercado Libre down 7.9%. NetEase is off 7.3%. So no doubt big numbers out here. We go take a look at the composite, NASDAQ composite. All the NASDAQ composite, the S&P 500, NDX 100, they all hit new all-time highs today. We had the composite get to 81.33. Right now you're at 80.79. We go take a look at the NDX 100. NDX 100 got up to a price point of 76.91. You're at 76.30. We go take a look at the Russell 2000. Russell 2000 out here traded up to a high of 1740. We're at 1734. What that downdraft was intraday, folks, is that the comment period for the tariffs, this is just the law, this is how the law goes, is the public comment period goes up until September 6th. The news is that Trump is going to impose the tariffs on $200 billion in Chinese goods the next day. So that came out intraday. That's what basically took the NASDAQ from a positive to a negative. 877-927-6648. Stay right there, folks. We got our man, Mr. Jason Path, coming up next. Of course, don't forget, Jason kicks us off every trading day, 8:30 right here at TFNN. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 168. We got the NASDAQ trading down. Where is she? NASDAQ is trading down 30. S&P's down 7.5. Let's go over to our man, Mr. Jason Path, as we do each and every Thursday at 20 past the first hour. Don't forget, folks, Jason kicks us off every trading day right here at TFNN, 8:30 in the morning. You want an outstanding show, start your day off the right way, just tune into TFNN, turn it to our man, Mr. Jason Path. The easiest way to do that, folks, by the way, is this. Go to YouTube. At YouTube in the search bar, just put TFNN. Hit the subscribe button. All the programs are going to be right there on your cell phone. Great way to watch us each and every day, and we do appreciate you growling and prowling with us out here every day. Brother?
What's up, man? Got some news here a few minutes ago, huh?
Yeah, a little volatility coming in the marketplace, you know, on a Thursday before Labor Day.
Great time for it.
I'll tell you, you know, if in fact, I think we all better go shopping over the weekend, folks, because if in fact these $200 billion in tariffs are going to go on our side, which seems to be the case right after September 6th, they're going to kick in about $60 billion, and we're going to be paying a little bit more for anything and everything coming out of China, which is just about everything, right?
Just about everything. That's right. Certainly. Yeah, everything that I buy. So $200 billion is huge. I mean, the total, I think, is about 400 billion. We've already got 50. And we're getting to the majority of things that we import from China at this point on a dollar level, at least. So it seems serious, man. We're talking next week now. I mean, we knew that next week was a possibility, right? But this is a double down maneuver. So
right.
It seems it's pretty serious.
It's serious. And, you know, there's, depending on how old you are, folks, out here, figure China opened up in 1980. That's kind of when it really just started opening up. And from 1980 on, you know, we've always, well, markets are always worrying about, like, okay, we haven't been paying a lot of money for goods because of the deflation factor as to the amount of things that have got produced in China. That's the bottom line. You know, labor is always a huge cost in producing anything, and bottom line is that that's what's kept prices down. So we all better get ready for a little price expansion here. I was just looking at Walmart. Walmart's not affected, but I can tell you, I think, well, we'll see what happens. But we're going to be paying more money. That's the bottom line. So.
Yeah, that's right. No, absolutely.
So, notes and bonds. Let's talk the note and bond market. So it's Thursday here today. Tuesday, folks, the note and bond market, that came down hard, man. I mean,
right.
Yesterday, I feel like it saved itself, Jason. To me, it got to a lower low, volume contracted. It didn't get to its strength from May, because we had big strength in May.
That's right.
So we'll see where this shakes out, but, it's still, I think we're on the same side here. It's like, these want higher price, lower yield, which is like, you can really scratch your head on that a little, I think.
Yeah, that's right. It's a bit idiosyncratic, but we see it continuing to your point, working that pattern. Even when we've had some relief, we've held on to the trend. I like a lower for certainly the next month. Lower yield, long bonds.
Yes.
Obviously volatility like we had, in the news flow. I'm watching yields right now, and we certainly have yields coming in off that type of news. The EM situation continues to worsen. That's obviously going to put downward pressure on yields in the United States. We talked a little bit last time. We got, the September 15th tax deadline for pensions. That's a $1.5 trillion money under management. They're coming off record highs in the stock market. They're rolling about 50% of those gains. It's about $70 billion into the long-dated debt market. Not all of that's going to go into treasuries. Some of it's into long-dated corporate, but there's a lot of demand out there with the growing interest rate differentials. Even though yields are in the United States, it's a lot better than Europe.
Sure. Okay, so here, can we? Jason was explaining this yesterday, but I really got to wrap my head around this. And the part that, okay, so we have till September 15th, right? Mm-hmm. And you were talking about that there's a differential of approximately, 14%?
Yeah, you can deduct your contribution at last year's tax rate as a corporation, which was 35.
I see.
As opposed to the 21% this year. That changes on September 15th.
Okay. And so the incentive for companies to do that 14 to 15% would go away on the 16th of September. And so you feel that they're buying these bonds because they're at a discount? Is that how that works?
Well, they're trying to de-risk their profile, so they've had huge gains in the equity markets over the last few years. A few years ago,
sure.
A huge headline was around the underfunding liabilities in United States pensions. We're still underfunded, but we've moved the needle considerably. Last year was a record year for pension fund contributions. About $75 billion went into making up that gap. Another $70 billion is going in this year. So the tax deadline's an extra incentive, but what folks are interested in doing, if you're a pension fund manager, is you want to de-risk your profile, take some of the gains you've had out of these record moves in equities, and put it into long-dated debt. Again, some of that's going into corporate. It's not all treasuries, but significant amounts going into treasuries. So a couple of weeks ago when we had those massive, auctions go out with a hitch, and we're all asking, where's this demand coming from? Folks are putting record amounts into treasuries, de-risking their pension fund through the record gains they've had, trying to beat the tax deadline.
That makes total sense. No, I get it now, because if you're selling after that, well, guess what? Your tax rate is lower, so your write-off is lower. That's the bottom line.
That's right. The write-off's lower. Exactly right. Exactly
cool,
right. That
man.
rolls over September 15th.
Oh, that's right. So that's going to be intriguing. That's a lot of. That's 14% is a monster number, man.
Yeah. When you've got $1.5 trillion market, I mean, it's a lot of money. And again, they're coming off of the magic here is the record gains they've got to roll back into their portfolio.
Yes.
And we're still seeing some of that go back into equities. Again, some of that's going into corporate debt, watching high yield closely, but a lot of that's going into treasuries. And then again, it's exacerbated with these EM moves.
Sure.
Folks are looking, flight to safety, and it's just continued upward pressure on treasuries. I think at some point this has to roll over, but I don't think we're there yet. I think we still got at least another month or two heading into the end of the year.
Yeah, well, we certainly, we're getting some high volatility inside the currency markets, that's for sure. I mean, we were looking, if we pull up this Argentina peso, this is like even hard to comprehend.
It's unbelievable. And it's certainly talked about. We talk a lot about it on our show, at 8:30 in the morning. But I still think it's hugely underreported. You look at Brazil, economies the size of Brazil and India are both at historic levels of weakness in their currency. I mean,
Yes.
India is a massive market. The rupee hit 71 today. 70 was unthinkable. I mean, 70 was just the reddest of red lines. They'd never let that happen. We hit 71 today, and there's no end in sight. We've got 420 on the real printing, and again, there's no, I mean, there'll be an end. Don't get me wrong, but I mean, we're still moving weaker today, right? And
Yes.
these are big, they're emerging markets, but I mean, these are, massive economies with their currency just vaporizing, as we speak here. So it'll be interesting to see how it shakes out. A lot of volatility, though, for FX.
Folks, stay right there. Jason and I are going to be coming right back. We're going to be talking currencies because we have to get our head wrapped around this deal because as individual wealth in those countries are just going poof, it's gone. Jason and I come right back, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Jason Paff, Tom O'Brien, we do appreciate you growling and prowling with us. Dow right now is down 144. Nasdaq's off 23. S&Ps are off 14. You know, Jason, so I just brought up the rupee. This is pretty wild, man, watching this. And in particular, so if we go back to 2009, folks, the rupee was at 39 rupees to $1 US. Now we're at 70. And what's so intriguing about that to me is that, you know, India, China, some of the largest owners of gold individually. And I'm really surprised thank God when they put their money into gold versus their currency, folks, you can see that, okay, they're not going to lose that kind of money. But it's surprising to me when I actually look at the rupee and then I look at gold, and it's like, I say, okay, does no one have even money to buy gold anymore? Do you know what I'm saying?
Right.
Because it would seem that with these currencies that are imploding, we would get more demand inside the gold market or the physical metal market in general, and we're not. So,
No, yeah, and we had a chart maybe last week where you can overlay gold with the yuan and the rupee, and it's almost a perfect tick for tick on a daily correlation over the last few months. Now, a lot of that has to do with the dollar, and they've just both been, all of them have been wiped out by the dollar. But there's definitely something to that. And when you think about, again, something the size of India with the rupee just devaluing that quickly, especially in India's case where they import so much oil.
Right.
It's a double whammy, right? And I mean, what's left to buy gold? What's left to put into anything outside of just staying afloat? Unfortunately, it's as challenging a situation as I've seen, as fast as it's come up in as many different places. EM is seen as such an asset class. Now, we've had EM contagion in areas, but we're talking about Argentine peso and rupee, and again, it's a tick for tick correlation at this point. Brazil and China, and it's intense these last few weeks, really over August. One of the underreported pieces of this, too, to me is, and this plays in India, in addition to Brazil, is the political risk. They're both places with elections coming up, so you've got leaders who don't want to take the conventional steps to strengthen the currency, do things like raise rates.
Okay.
Brazil's got elections coming up in October. They're just not going to do anything to raise rates. And when you got the real headed to 420, they've also got historically low interest rates right now. They're only at 6.5%. The idea that Brazil has 6.5% interest rates going into this mess is mind-blowing, but they're taking their time before the election. And again, in India, you've got an election coming up. It's a little bit later. It's not till next year. But again, Modi does not want to do anything to strengthen the currency that could be seen adversely back home. So they're just letting it ride. It is a bit of a can't win. When you're in that situation, you're just at the mercy of the dollar, unfortunately. But at this point, if you're Brazil and you come out with a 1-point raise on your rate, you would stem some of this, no question. And they're just not. They don't have the political will to do it right now. So there's really not a lever. Yeah. Same thing happened in Turkey. I mean, they're just not going to do anything.
The amazing part, folks, is that when we start breaking some of these down, it's hard to comprehend that there hasn't been more contagion. Because if you happen to be watching Tiger TV, I'm bringing these currencies up as Jason and I are talking about it. And if this was in the United States, it's taking away your buying power by 30, 40, 50%.
Yeah.
And this is something that's done very quickly. What I'm trying to figure out, I hear that, okay, so when the dollar goes higher, our interest rate structure starts going higher. That hurts the emerging market in a huge way. What I can't quite comprehend is, like, when I'm looking at the rupee, are they also just printing more paper also? And is that one of the reasons? Or is it just our interest rate structure that they've taken too much, they're dependent on us too much versus what they have going on in their own country?
Yeah, unfortunately, I think actually, at least in the case of India, it's both. They have printed more, and they're too dependent on us. And again, India's pretty import dependent as well, so it hurts them there as well. But yeah, India's had a jump in supply of money in addition to they're just highly. I mean, the Federal Reserve just drives the deal, and folks have leveraged up, right? They're more exposed, as we've talked, to the dollar-denominated debt. Their current account deficits are not in good shape. They just, they've got to buy dollars to pay their bills,
which is intense. Yeah,
it's intense. And then you get in a situation like this where you get a bit of a run. I mean, there's just not a bid on their currency right now. It's just going to continue to ascend upward. I don't really know. I mean, on the one, I think we get to 7. I didn't think we'd get to 420 on the real. We're heading up to 420 right now. I thought 415 might have been the line. 71 on the rupee is just staggering.
And so this morning, I got the real up right now. We hit 421.
I know.
4.21.
Just staggering numbers. And again, in the case of Brazil, they've got 50 billion in reserves. That's a pretty good number for them. They've got the capacity to raise rates, but there's just no political will to step in. And so we saw the same thing in Turkey a few weeks ago, right?
Yes.
Like everybody can, figure out, like, you just got to raise rates. Just show the market you're willing to do something serious, and they won't do it because they don't want to face the questions back home. But to your point, back home there's going to be a lot more questions when folks can't buy soap, and
Right.
and you go to order a meal and you go to the restroom, as you've joked before, and you come back and your bills double. But it's just a can't-win situation. It's a tough thing to see. And when you talk about Argentina, man, that's real pain. Like those are folks that are just in real pain.
Listen, I was saying to Kevin Hinks earlier this morning, Tommy and I were talking, I was like pretty serious about going to Argentina like about 5 or 6 years ago, actually longer, 9 years ago, and checking out a couple ranches. I mean, because I'd like to be a cowboy.
That's right. I joked with somebody the other day, a coffee plantation in Brazil right now is, like, in my opinion, one of the best investments somebody could make. It takes a bit of stomach, but, I mean, you can get a coffee plantation for next to nothing today, you know, and, that market will come back.
Yeah, right.
I mean, coffee's just a brutal low, and with the strength of the dollar now, but, it's...
Yeah, no, I can see that, man. That's what I'm trying to figure out is that, guess what? You're talking Argentina folks in Brazil, they're monster commodity countries. I mean, that's like just huge. I mean, I guess Argentina got hit by the drought, right? They're hurting because they got hit by a drought, which hurt their, the beans, and probably, I don't know if they get wheat, but the bottom line is, beans for sure.
That's right.
But...
And the strength of the dollar just wipes you out, man.
If the dollar gets see, to me, think about this. I mean, the dollar index is at 94, folks, but that's not even like strength. I mean, it's strength from 88 we went to. But you bring this back, and that's the range we've been in for long period of time, man. I mean, if I just bring this back quickly, and I'll put this on. Let's see. I'll put this on a 50-year chart. I don't think the dollar index goes back that far. We'll find out. You'll see, look at, I mean, it goes back, I get this to 87, you're at 97. We're at 94. You had highs out here of 121. That was in 01. You get lows of 70, which is in 2008. So it's strong, but guess what? I mean, my point is, I don't think it should be destroying all these other currencies.
Right. Think about if we got to 120 in this environment, man. I mean, it'd be Lord of the Flies anywhere outside our borders.
Totally. Well, listen, man, it's always a pleasure. We look forward to the show tomorrow morning.
Look forward to it, man. 8:30 a.m.
Absolutely.
Thanks,
Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. And if we do take a look, I still have this dollar index up that Jason and I were talking about. It's pretty wild, actually, you know, because when you take a look at it, we go back 1987, you're trading at 95. You consolidate from 87, going all the way over to 99 between, 106 and 81. We go topside in a huge way. In 2001, you get to 121. Now, this is where what really got intriguing here is that this is where the gold bullion market, metal market in particular, finally finished a 22 to 25-year bear market when the dollar hit 121. That was in September of 2001. You tested the highs out there in in March of 2002, and then it was a one-way trip. If you remember, this was when the first Treasury Secretary was Snow, and Snow just kept saying that, yeah, we believe in a strong dollar, and his tenure, we went from 120 down to 80. It was a straight line move down. We hit the low in 2008 at 70. You did a huge bounce. The first bounce got you up to 89 in 2009. You go back down to 72, and then the last bounce got us up to 103. Now, if we take a look at this whole structure, this is kind of cool, actually, because I haven't done this yet. From highs to lows, this is intense. Okay, so when we take the high of 2001, the low of 2009, when we did that counter trend, well, it wouldn't be a counter trend bounce. We did a big bounce. We did a 0.618 bounce. So that says two different things when you do a 0.618 bounce. Number one, it's a strong bounce. Number two, what that is saying is that you can get back up to those levels, number one, which is 103, but that's also saying on a longer basis you can actually get up to those highs. Now, I'm going to do the opposite correlation of that and bring up the gold continuous contract, and we will go back and do that correlation and take a look at it. And what you're going to end up seeing, of course, is that you're going to see gold down at a price point in 2001 of 255. Pretty amazing. Think about that. And so watch this, folks, okay? In 1980, well, here, let's do it this way. 1976, gold was $100. 1980, in 1 month, it shot up from in 1 quarter, 453 to 873. Then what does it do? It crashes. In 1 month, it goes from 873 down to 405. That was in June of 80. Ended up getting into $295.82. And from that point on, from 1982, going all the way over to 2002, 2003, you're still trading at basically 282, 300, right around there. Then it marched forward. And the march forward, you know, bottom line, started in June of 2001, 285. You had a straight line move up to 432. Now, percentage-wise, that's a big move. We were sideways for about 4 months. Another straight line move up to 732. Go sideways for another 4 months. Another straight line move up to 1,033. Now, this was the big hit. So if you remember that if you were in the market in the crash of equities, real estate, everything, okay? Gold went from 1,033. 3 months later, it's at 666. Showing 681 here, but the actual contract was 666. And then what did it do? It took off again. It went, took off in 2008, 681, hit a high out here of 1920. Now, I'm going to do the correlation on this one, which is pretty cool, of also highs to lows. And in this particular case, this is, if you happen to be a metal bull, this is what you want to be, this is what you want to see, you know. And what the move that we came down was a 50% move of the move. That's in 2015. That's when we hit 1,046. So that's a 50% move of the full move. And guess what? We've been consolidating since that point. So we'll see where this whole thing shakes out. The bullish part of that would be that you only did a 50% move down. We'll see where it shakes out, meaning what this good old dollar index wants to do. When Jason and I were just talking, what is really unusual, folks, there's no two ways about this, is that when you have currencies implode in general, most times you'll get contagion from one country to another. I don't believe I've ever actually seen the type of implosions that we're talking about inside the currency market when you are talking about major countries. You know, whether it's Brazil, whether it's Argentina, whether it's India, you know. And what I was really surprised about it was this on the India story. So yesterday, what you had is that you had the aspect of Buffett, Google, forgot who else. Well, I'm sure Amazon's in there. But you get a lot of these big dogs going into the Indian market, and they're going into the Indian market in the fintech area. You know, what has happened with the Prime Minister of India, he was trying to get everyone to get rid of their large notes. I believe he did. As well, he'd love them to turn into gold. They're never going to turn into gold. They're way too smart for that. But bottom line, they are trying as much as they can to get into a digital era. If I've learned anything about India in, let's see, 40 and 48 years, India has supposedly been going to make it for the last 48 years. It just doesn't seem to fly. Each and every time that I hear people that you're putting this in India, you're putting that in India, it's not a China. It's not when I look back. Supposedly was supposed to happen in the 80s that both of those nations were supposed to go forward simultaneously. It makes sense that they would, but guess what? Never happened. And when I saw that yesterday, I'm saying to myself, you know what? To me, it's still not going to happen. And a lot of it has to do with corruption. It has to do with they're different countries. And just because you have huge amounts of people, you know, doesn't mean that you're set up to do huge amounts of business. What happens, I would say, in both those countries is that, you know, in China, what you had, no doubt, is that whoever was there first produced a lot of goods. In India, they're still dealing with the caste system. You're still dealing with a lot of, you got haves that are very small. You got a big middle class that's coming up, which has been great, but the divisions are still way too big in order to basically have production powerhouses. Dow Industrials down 157, NASDAQ down 28, S&P's down 15.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow up, Dow down 150, NASDAQ off 26, S&P's down 14.5. And I tell you, you know, these, well, here, this story here is about Google. Bottom line, folks, they have so much information on us, and there's so much information that we don't know in the deals that they're doing. So this deal here, Google had done a deal with MasterCard, and this is how the deal shakes out. So this just came out. For the past year, Google advertisers had access to a potent new tool to track whether the ads they ran online led to a sale at a physical store inside the United States. That insight came thanks in part to a stockpile of MasterCard transactions that Google paid for. But of course, the 2 billion MasterCard holders were not aware of behind-the-scenes tracking. That's because the companies never told the public about the arrangement. The arrangement goes like this. The arrangement would go that Google and MasterCard, they brokered a business partnership. Took them 4 years to negotiate the deal. Bottom line, got the deal done. And what it does is this, is that people don't expect that when they buy physically in a store to be linked to what they are buying online. So this just came across the tape, but the bottom line is that Google paid MasterCard millions of dollars for the data. They, according to two people that worked on the deal, the companies discussed sharing the portion of the ad revenue. The people who asked not to be identified because, of course, private matters. We're going to see, this is going to be really wild watching how this thing shakes out. Because what these companies continue to tell us is that they can't see who we are, what we do, and all of this. And you know, that's a lie. It's not even close, okay? In this particular case, what they've done, they already know what our IDs are, whether it's our phone, whether it's our computer, whatever it is. In this particular case, they match that with the actual physical buying of transactions in physical stores. That's what they were trying to do. They were trying to figure out, okay, we know we can get you something to buy online. Now what we want to try to do is figure out, I'm going to take you from online, I'm going to send you to the store, I'm going to know what you buy. Stay right there, folks. Coming back with some numbers after the close. Dow Industrials down 139, Nasdaq off 23, S&P's off 13.5. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. We are kicking into the Labor Day weekend. Bottom line is that tomorrow, wrap it up. See where this whole baby goes. Always do your best. Take action on your ideas. Doing your best means to take action on your ideas. Yeah, you can have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We had the Dow Industrials close down 137. NASDAQ was off 21. S&P's down 12. Bottom line, we really got a sideways market out here. Dow went down 0.5%, S&P 0.5, NASDAQ 0.2. Gold contract down $5.30, trading at $12.06 an ounce. We had silver down 22 cents, $14.47 an ounce. Copper down 5.5 pennies at $2.67 a pound. Light sweet crude up 62 cents, $70.12 a barrel. Bottom line, oil is at the top of its range. We'll see how this shakes out. The actual, if we go take a look at this contract, what you're going to see inside this contract is that in May as well as July, last two times that we were up at these levels, you had sellers inside this market. Bottom line is that we're up 0.8%. You only have to go up a few more ticks in order to get those highs, and I suspect we're going to basically test them. The high that was out there on the 29th of June is $71.29. The high in May is $71.63. We're laying here at $70.10. So coming into Friday, I expect we're going to test them. We'll see how that market handles it, because the bulls and bears are going to be fighting. They are fighting at these levels. They're going to be fighting more right at that particular level. Note and bonds. Note and bonds want higher price. You had the 10-year note up 5 ticks, 120.08. 30-year bond up 9 ticks, 144.28. Bottom line, they got below their lows yesterday, had lighter volume, rejected lower price, take off topside again today. They want higher price, lower yield. King dollar. King dollar gave it up again coming into the close out here. King dollar, folks, up 93 ticks, 94.615. The euro is at 116.72 to 1 US dollar. The yen is at 111.04 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, what I'm going to do, I want to go to the world of currencies out here today, because what we have had, folks, is this. You have had many countries' currencies blow up in an incredible way. I'm going to start with Argentina. We go take a look at the peso, just so you can get an idea of, number one, fiat money, meaning paper money with nothing backed behind it, what can happen. The astonishing thing that, as we go through this, is that this has happened to so many countries so quickly, and thus far there hasn't been any basically contagion from country to country. These are individual deals, but when I look at it, it's going to be an individual deal until it's not, folks, because these are some serious hits to people's wealth of what they can actually buy. So what I'm going to use as I go through them, what I'm going to do Argentina, we're going to do Brazil, we're going to do India, and we're going to do Turkey. And on each one of them, I'm going to put them up on a 5-year chart so you can basically get an idea of the amount of wealth that has been lost inside the country. So if I go back 5 years ago and look at the Argentina peso, it was 5.7 pesos to 1 US dollar 5 years ago. Today, it's 38.5 pesos to 1 US dollar. Huge implosion. That's one of the largest implosions, no doubt. So that's Argentina. We go take a look at the, let's go into the lira. We'll go into the Turkish lira. We're going to put the Turkish lira up. I will bring this back 5 years also. We take a look at this 5 years ago. So 5 years ago, the lira was trading at 1.96 lira dollar to $1. Today, 6.65. Monster move, right? You can see just pure devastation. Pretty amazing. The rupee. We go to the rupee. We go into the India. Let me get this rupee. 1 second. I got it. The Indian rupee, because you have Indonesian rupee too. Okay, so we get the rupee. I bring this back 5 years. Right now, the rupee. There she goes. Okay, so the rupee 5 years ago was 60 rupees to 1 US dollar. Now it's 70. So that's not that bad compared to the rest of what we're doing. Bottom line, though, it has got tremendously bad in the last 6 months. Because 6 months ago, well, no, it was 63. Now it's 70. Bottom line is that you can still see the destruction. The okay, so which one didn't I do? Lira. I did lira. I did the peso. Oh, I know, real in Brazil. We take at the real. We take a look at Brazil. Okay, so we bring this back 5 years. Five years ago, it was 2.1 reals to 1 US dollar. This year, 4.15. Pretty amazing. And one of the main reasons, folks, that I'm actually bringing these up also is that when you have, and in most cases, what the mantra that you hear on the financial press is that that's because of the strength of the U.S. dollar. Well, when we bring the U.S. dollar up, folks, what you're going to see, and we did this when Jason was on the first hour, it's not even that to me, it's not even the U.S. dollar is that strong, okay? Yeah, in 6 months and 5 months, we went to 88 to 94. But when you bring the U.S. dollar back, okay, just in general, if I bring this back, what you're going to see is that the U.S. dollar's been in a range and stays in a range and has been in a range for a long period of time. Now, the range is large, but if I bring this back to 1988, guess what? You're at 94, right where we were. That was normal between basically 85 and almost 100 until 2000, to the year 2000. 2001 shoots up to 121. 2006 down to basically 71. Bottom line, the currency fluctuations and the amount of wealth lost in those countries is going to basically have ramifications. Stay right there, folks. Coming back when I'm Mr. Basil Chapman.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Lululemon. Lululemon closed at $137. That is trading at $146. They just come out with numbers. Lululemon's case, they blew it away. Estimate was 49 cents. They made 71. Ulta Salon, different ball game. Ulta Beauty, that closed at ULC. Ulta. Whoops. There we go. Ulta Beauty, that closed at 244. That is trading at 231. And numbers on this one here, the estimate was 241. They made 246. So we'll go over those numbers in a bit. But first, folks, let's go to our man, Mr. Basil Chapman, as we do each and every Thursday at 20 past the second hour. Don't forget, folks, Basil's got an outstanding show here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, the opening call. The way you get the opening call, you come over to our website at TFNN, go under newsletters, trading newsletters, see the opening call right there. Check it out, 30-day money-back guarantee. Basil Chapman, what's going on?
Hi, Tom. How are you?
Going great, man. Yourself?
Very good. Thank you.
So I know, I mean, this is your time of the year. You got the U.S. Open happening. Unfortunately, it's so hot up there, man. I'm watching these guys. I was just watching the guys last night.
It's like,
it's intense, man. So, and you're in the middle of a heat wave right in Boston, right?
Well, we were lucky. We were on the Cape for a few days, and the weather was just fantastic.
Perfect.
So that was very nice. But here in the Boston area, in Newton was humid. I mean, that was record temperatures.
Yeah.
Very hot.
Wow.
And humid. Yeah.
Okay. Well, we're talking about hot.
Good to be back.
Yeah, it's great to have you back, man.
So this is a very interesting market because we're looking at the Dow right now. And actually, I should just mention, I always forget to do this. In my newsletter, every single day, I show different time frames. I show the Dow in the 120-minute chart. I give a little synopsis of exactly what we're looking at based on the Chapman wave. And you can see that in this particular one on the left, a little faint, but we made a peak E in the Chapman wave, the fifth highest peak. Also Chapman wave 5, it's another technique that I use. And I said that there should be some kind of a pullback. The MACD was still quite good. The stochastic was holding at 92%. And now I'm going to move this away for a moment and show you. And this is what happened today in the 120-minute chart of the Dow. And actually, we did start late last week. We started a long position just for going into this coming week. So you can see here we've had that pullback, and we went below the green lines, the 20-period exponential moving average. MACD turned down, stochastic turned down, and you can see there's a cluster of automated Chapman wave projections of support and resistance. So we stopped at that resistance. Now we're in the support zone. I'm suspecting that no charts, they said. I'm sorry about that. Let me just do that again. Give me 1 second. There it is. Chart coming up.
Bingo. Okay.
Okay.
There it goes. Awesome. Thanks, Basil.
There are. So what I had said was that we were at that level right there. There should be a pullback. Actually, the pullback was a little serious early in the day, and then there was a really strong rally, and all of a sudden there was news about further tariffs, and there were just the whole political and economic scene came into force, pulled the market back, and we went underneath 25,000 for a brief period. We've closed at 25,986. But what I also said to subscribers is, everything I'm looking at suggests that this is probably a peak B that we've made here in the daily chart. We should go at least to the fourth highest peak, a peak D. So I'm suspecting that we've got to rally somehow or other. We squeak to nominal new highs. I don't think this is the phase right at this moment where we go to 26,616 to test the all-time high. That was the all-time high back in January the 26th. But I think there's just enough strength for a couple of stocks to finish their moves to the upside. A couple of the indices also need to get another leg or two to the upside. I think we rally into mid to late week, next week after the Labor Day weekend. The MACD is still strong in the daily chart of the Dow. Stochastic is still very strong at 94%. So that's why we're long, and we're looking to see if we can just get this last extra bit. And then I think we're going to start looking again at the short side. So we still have United Technologies as a long, and it's holding very nicely. We entered in the 119s. It's trading at 132. There's this very strong resistance at 136 to 135.5. I call it the inside track repellent zone. So from that peak D on the 28th of July, we pulled back a little bit. But that weekly chart is still holding pretty well. We're still long the other position we had. It actually had a very good week so far. IBB, we're long. We've taken some profits. We still have a long position. Leg C in the daily, look, leg E in the weekly. And there was that high that was made back in July of 2015 at 133.60. The all-time high, if you remember, that was the all-time high. And I also believe, this split, the IBB split, I always wonder what happened to the number, because we were lucky to have shorted it at one point for about 100-point profit. So now what we're looking at is I always like to think fund managers tend to go to what they've been in before that worked, and then when it fails to work, they sort of come out, then they come back in. So they've been in for a while. So the NASDAQ Biotech ETF is actually holding very nicely. Let's see how it does if it can get to that leg D next week. But it looks to me that 122, we're in at the 110 area. So it's a nice gain, but I would like to add to this on some kind of a pullback. So far, it's acting very well. Also, we're still long the dollar, and that dollar, you spoke about it earlier on. It's very interesting. It had a very sharp pullback after. You remember I spoke about that pattern in the Chapman wave that I call the stork leg formation?
Yes.
So it's done the leg, the oval pattern. Yellow oval is always the body. Then it makes the neck, which spikes over that oval. And then when it reverses down, if it just comes back down and only tests the top of that, the body itself, and then bounces, that's really good. But if it breaks into the body, you have to hold it for a little bit to see. It mustn't take out the low that was made, in this case, of this oval pattern. That would be 93.71. So it's trying to establish some kind of a base here. The daily's in a sell mode from a peak D at 96.98. We've been long on the UUP from the $90.07 level. So it's a very nice gain for a currency. But it's this monthly chart that's going to be very important. The MACD stalled right instead of crossing over. We've got one day to go. We'll see what happens in August, but it looks like this is going to be the big thing.
Just kissing it, yeah.
Yeah, just kissing it. It needs to cross positive to be able to start a new move. But when you've had 1, 2, 3, 4, 5, this is what, the 7th month of an up move in the dollar for a currency, 7 months in a trend. That's a long time.
Big number,
currencies, and currencies usually stay in trends for quite a while. So this is going to be very important. In September, is there a rally that takes it above the 96, 98 level into the 97s? To me, that would be really important. Is there going to be a breakdown if it closes under 93? So the parameters are quite good, quite clear. So far, I'm looking at it and I'm saying it's holding very well. So far, it's good. We are still long, and we'll see what happens. But it's going to be very important for the currencies and gold, I think, for what happens next. I'd say the next 1.5 either way in the dollar is going to be very important.
And folks, you can come over to our website at TFNN. Great newsletter, opening call, the way you do it. Go to TFNN, you go to newsletters, you go to trading newsletters, you're going to see the opening call, 30-day money-back guarantee. And of course, every trading day, right here, noon to 1 Eastern Standard Time, you can give them a call. Basil, you have a great one, safe one. Of course, we look forward to the show tomorrow.
Thank you very much, Tom. Have a great day.
Thank you. Stay right there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We had the Dow finished down 137, Nasdaq off 21, S&P's down 13. If we go over it, let's go a couple of these equities that did come in with the numbers. The first one, Lululemon. So Lululemon, folks, of course, is the large retail athletic clothing product market. The low for the year is $56. The high is $140. This closed at 137. That is trading now at 146. So you're at all-time highs. Let's see what they have to say here. So the it's pretty amazing. They got some big numbers here. The expectation. Okay, here we go. So, second quarter expectation had been 49 cents. They made 71. That is one huge number. Huge. To bottom line. The expectation for revenue, also a big number. Look at this. The expectation was $667 million. They took in $723. Imagine having a company like that you think you're going to take in $667 million, which is great in itself, okay? But what you end up doing is taking an additional $50 million over that. In 90 days, mind you, in 90 days, big number. So that is the second quarter. Third quarter, which they're in right now, they had an expectation of a range of taking in $707 million. They've upped that range now. They think the low end of that range is going to be $720 million, the high end $730 million. On the yearly estimates, folks, they also upped the yearly revenue. They had been thinking that they're going to take in $3.09 billion. Bottom line, they're going to take in $3.19 billion on the low end, $3.25 on the high end. If we do take a look at that chart, let's see. So if I put this on a weekly, this has no doubt been a rocket ship from $47 in 2017. You had one ABC up. Let's see what this ABC up had as a price projection. Well, actually, we're going to have another one. We know that. That's going to take the, well, actually, this already took a beep. Let's see. 8.5 million. Yeah, it's already an ABC up. This gets intriguing. That's 77. Oh, it's a big number. So it's approximately 30, 40, 55 bucks. That gets you up to, yeah, it gets up to 165. So there's action there. Ulta Salon, we take a look at Ulta Salon, Ulta Beauty. Ulta Beauty closed at $244. The low for the year is $187. The high is $261. Ulta is trading at $230. That's down $14. So that's a big number there. We pull this back. And, you know, Ulta, the high of Ulta is $314 going back to 2017. Ulta's challenge, folks, is going to be they have a high volume low laying out here at 187. It's going to get hit. What we're going to see here is that Ulta will hit the highs of the low bar from October of 2017. That high is 220. And right now we are trading at 230. So let's see what Ulta has to say. Okay, so the estimate net sales had been $1.49 billion. They did $1.49 billion. Earnings per share. The estimate had been $2.41. They did $2.46. So they basically did make both cases. Comp sales. This is going to be a big problem here. The yearly comp sales, they were expecting a plus 8%. They only are looking at they only looking at a plus 6%. That in itself is saying quite a bit, folks, because what you have here is this. This is a company that huge box stores. What they did business-wise is that they turned around and brought the beauty business, the high-end beauty business, to the retail consumer. That, you know, you could walk in one of these stores without a beauty license or I don't know if you call it a cosmo. It's some kind of a. It's definitely a beauty license. And before you had Ulta Beauty, most places you needed a license to go in there in order to get discount products. So Ulta put it together that high-end products anyone can walk in. That being said, you can see when you're looking at that comp number, that comp number going down is saying quite a bit. And it's probably saying that online they probably are getting hit and not growing exponentially as they had been growing exponentially. The third quarter coming up, they see somewhat of a problem here also. They expected 8% comp sales. Now they're thinking 7%. Their earnings per share, they did bring that number down. The estimate for the third quarter, which we're in right now, $2.31. Now they're looking at $2.11 to $2.16. So bottom line is that you can expect that, number one, you're going to get some selling. Number two, that high volume bar that's laying down there, that's where you're going to get support, number one, at the $220. Once you dig into that, if in fact we dig into that pretty good, what you're going to end up seeing is that the 187 is game right as you dig into that number. Pretty amazing. Intraday out here, what you had when the NASDAQ pullback, you know, so when all said and done today, you really have a sideways market out here. So let's go take a look at the volumes. Volume in the NYSE was 640 million. That's light volume. We take a look at the volume inside the NASDAQ composite, 2 billion. Bottom line, you get a sideways move. What was a little bit that you could say that we did pull back is that if you did take a look at the NDX 100, the NDX 100 today had been up at a new all-time high. That was up at 76.91, and then it gave up basically 50 points in about a heartbeat when it came out that more than likely Trump is going to put the 200 billion tariff on China on the 7th of September. The 6th of September is the date that they had 60 days, not China, all of us for comments. Under the law, you had 60 days to comment on putting the tariffs on it. Bottom line, that is up on the 6th. The story saying that on the 7th, you know, more than likely we're going to see that come down. And the last 20 minutes, he's been quite busy out here too, because let's see what we have. There's just let's see. So there's Okay, so he's doing an interview. He's doing an interview right now in the Oval Office with Bloomberg. He just said that Sessions' job is safe until at least the November midterms. He also said that he doesn't regret appointing Powell as Fed chairman. And then this is a big one. You're going to start hearing about this one. He's thinking about indexing capital gains to inflation. We'll talk about that when we get back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Okay, so this one's going to get pretty interesting, mathematical when we do this. I'm going to go through just an example. So this was floated out here about a month ago, too, and then Trump said no, he's not going to do it. But now, in this interview right now, he said he's considering a capital gains tax break by issuing a regulation that would index gains to inflation. I'm thinking about it. That's a quote that Trump said Thursday in the Oval Office interview with Bloomberg News. So watch how this would work, folks. I'm gonna use 1980 as a gauge. Okay. So pitch it now. This would be whether it's any type of long-term investment you get that you have to pay a capital gains on. So if we take just $100 in 1980, and then we take what that is basically what you would need today to buy that same $100, and this is where you're going to see how just small inflation basically what it does to money in general. So this is what the number is. 205.83%. You need right now $305 for the same equivalent of $100 in 1980. Okay, so that's how that works. Okay, $100 1980. Right now, $305.83 would buy you the same deal. That average there is 2.95% inflation over that period. Now watch how this would work if this indexing comes into play. Well, let's picture that we just bought a, let me do it this way. I'm going to do 123.00. Okay, so we bought a house and at $100,000. We sold that house this year, okay? So let's say this indexing goes into play. We sold that house, and this is an investment. Let's say this is an investment property. We're collecting rents on all of the above, okay? So normal, just investment. What ends up happening? We sold that house, and we sold this house this year, okay, for let's say $500,000. That'd make sense. I mean, that's still only like about 5% per year going over the course of time. Okay, so in that particular case, you'd be paying a $400,000 long-term capital gains cost, okay, which in this case would be that'd be $60,000. 400,000, 15%. That's your tax bill. Okay, so what would happen is that if this regulation went into being, what would end up happening is this, is that the amount of money would get indexed, and in this particular case, instead of us paying a capital gains on $400,000, you'd be paying a capital gains on $195,000, because that dollar that we had paid in 1980 is really $3.05. So in that particular case, you don't what, 30,000. Yeah, you don't 30,000 instead of 60,000. That would be in the real estate transaction. On the stock transactions, same type of setup. So it's going to be interesting to see how this thing shakes out. Now, this is a cool time to bring this up too. So picture this: we had the huge tax bill cut for companies hand over fist, right? Okay, we know the companies are saving a fortune. I mean, beyond belief, right? The mantra there was that, yes, they're going to basically hire more people, they're going to do this, they're going to do that, they're going to do all this. Well, guess what? Our bottom line is that it hasn't happened. Companies are making money hand over fist, that's for sure. What blows my mind is that when you look at something like this, that you're going to index it, what happens there is that, number one, you have to be basically at the top of the ladder, because people that hold, whether it's stocks, real estate that long, bottom line, most of them, it's going to be close to the top of the ladder, right? This is on the same day that Trump turned around, and it's just, it wouldn't be just what he has done. What did happen is that Obama did this, as did Bush, okay? As to cost of living raises for federal employees, there's a law in the books that bottom line federal employees, you get a huge federal bureaucracy, they're supposed to be getting raises. As to the cost of living, you can agree or not agree with it. Bottom line, it's been in place for a long period of time. Well, what he did out here today is, bottom line, he turned around and he's going to fight it. And, as I said just a little bit earlier, the last two presidents also did fight it. They end up getting a raise. But what blows my mind in this context is that on one second you're saying, hey, guess what? We're going to cut taxes even more and take less money in. And simultaneously, all the workers, we're going to make sure that they don't get a raise. There's such a disconnect, folks, as to, number one, what keeps our country going forward versus the victor in the spoils. And the victor in the spoils, meaning that the picture of these large companies, the amount of money that they basically got a cut on is extreme, because what they all have on a continual basis and have had is that the amount of write-offs they have before they even start their taxes is huge. So we'll see where the whole baby shakes out. Market-wise out here, what I expect we're going to see overnight here, the currencies. The currencies across the world, folks, they are rocking and rolling. You know, last night over in Asia, the whole world last night, Asia was down about 1.5%. We had Europe down today about 0.4 to 1%. We had a sideways market. And what I do expect we're going to see out here tomorrow, by the way, you're going to see a slow market. You're going to see a sideways market. No big number pulling back or going to new all-time highs. What we did out here today is that this is the first day that we got to the all-time high and basically gave it up. This market will get going volatility-wise a lot heavier, I suspect, near the end of next week. Now, it won't be Tuesday when we're coming back, because what ends up happening is that most times everyone's just getting settled back into their, basically, spaces, get things going. Wednesday, Thursday, Friday, the following week, you can expect some movement. And what I do expect is that the first part of that movement will be the Chinese tariffs. The Chinese tariffs out here, it's going to be a big number. 200 billion, folks. That is a monster tax. And by the way, that tax we're going to be paying. You know, you go to any store, bottom line, everything is from China. What's going to get intriguing is watching the Walmarts of the world and see, okay, are these babies going to get hit? You know, Walmart's been on fire, man. The thing is almost at all-time highs. You're at $96 right now. You know, and we'll see. And what that would be, it wouldn't be just Walmart. It could be Amazon. It could be all these large retailers, because as we start looking at these products, and it'll probably take about, 30, 60 days, whatever, and start realizing that, hey, everything has just gone up 10, 12%. Well, that's the tax. That's the tax that's coming in. Dow finished down 137, NASDAQ off 21, S&P's off 14. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if we go over to Amazon, folks, what you had out here today, now Amazon ended up being basically flat, up $4. At one point, it did hit $2,025. At the close of $2,002.38, it has a market cap of $976 billion. At 2050, folks, Amazon will be the second trillion-dollar company, and I do expect we're going to see that come down the pike fairly soon. The run here has been pretty amazing. You know, we go back and you just look. It's August 30th of 2018. If you go to January 30th of 2015, this was a $285 stock. It's hard to actually comprehend. You know, you got to, let's see. So you get a 10-bagger in 6 years. It was $200 in 2012. We go back down to the crash, and that gets even more intense. It was $37. $37. And what Amazon had done, too, by the way, folks, and I remember this so well, Amazon was the first equity that was off the lows way before the market was off its lows. Amazon came off its lows in April of 2007. It was at $37 in March. In April, it was at 63, and consolidated for a couple years. This start the slow crawl higher, and of course, when we take a look at the revenue models, Amazon, you know, went from a company that was losing money. In fact, if you go back to 2014, it was losing 52 cents in the year. And 2019, they expect to make $25 per share. So you went from, the bottom line is that they not only put it together, they built it out, and now it's just hand over fist. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Go have a blast with it. We look forward to speaking to you right back here, 8:30 tomorrow morning. Join Jason. He's got an amazing show. Wow! Go get him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.